The euro and the British pound fell against the US dollar in early trade yesterday before resuming gains later in the day. Traders digested data on Eurozone inflation for the previous month. Euro area annual inflation stood at 2.5% in June 2024, down from 2.6% in May, and in line with economists' forecast. Core inflation held steady at 2.9%, coming above expectation for 2.8%. and signaling increased price pressures. After that, market participants shifted their focus to Fed Chair Jerome Powell's speech, which limited the risky asset upside potential. However, his statement failed to have a severe impact on market sentiment. Today, the euro has every chance to extend gains. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes a batch of statistics on services activity in Eurozone member states and the United Kingdom. Traders will also receive composite PMI figures. A decline in business activity could weigh on the euro, while an upward revision of the indicators could help the European currency continue its bullish run. As for the British pound, its reaction to PMI data is likely to be more pronounced as the UK services sector accounts for the lion's share of economic output. In addition, data on Eurozone producer prices is due out today, but is unlikely to have a major impact on market sentiment. The same goes for speeches by ECB members. Wednesday's macroeconomic calendar is also full of reports from the United States, including non-farm payrolls, initial jobless claims, and the ISM Services PMI. U.S. services activity is estimated to have slowed to 52.5 in June from 53.8 in the prior month. If the indicator remains above the 50-point mark, demand for the greenback may revive. The US dollar may also be supported by the hawkish tone of the minutes from the Federal Reserve's most recent policy meeting. Now let's consider the market from a technical perspective. According to the 1-hour chart, EUR USD, a false breakout at 1.0733 will generate a strong buy signal, pushing the euro up to 0.768. If the price breaks through and consolidates above this level, the euro is expected to climb to 1.0791 and even 1.0816. At the level of 0.816, I recommend going short on the rebound to catch an intraday correction of 25-30 pips. Short positions at 1.0768 and 0.791 can be opened in case of a false breakout. A rise above 1.0768 will help the euro break out of the sideways range and gain strong upside momentum. In a bear case scenario, going long will be relevant at 1.0711 or at the support level of 1.0689 on a false breakout. Long positions on the rebound can be considered at the 1.0669 mark, expecting a 25-30 pip correction. Speaking of the British pound, bulls are also poised to break above the upper border of the sideways range at 27.07. If sterling comes under pressure from UK services PMI data, a false breakout at 26.67 will make it possible to buy the pair, counted on a bounce to 27.07. If the price breaks through and consolidates above this mark, the British currency will have a chance to rise to 1.2732 and possibly 27.61. At the level of 1.2761, traders are advised to go short on the rebound to catch an intraday correction of 25-30 pips. Going short at 27.32 and 27.07 will only be relevant after false breakout, as it is worth being cautious when trading against a short-term uptrend. If bulls fail to regain control of the market at 1.2667, long positions can be considered at 1.2640 on the false breakout or 2613 on the rebound in anticipation of a 25-30 pips advance. Best of luck.